Are there any changes to the R&D tax credit if the work is performed offshore, the name of the country, but it's relevant, and can the credit be claimed? So we're talking development is being done, software development being done offshore.
I'm not the guy to ask about the offshore, but I will tell you what the R&D under 174 with the One Big Beautiful Bill is now you can write it off versus amortizing it. That is something both the Republicans and the Democrats agreed on. That's the number one thing. The 199A was some stipulations, but the R&D, you'll be able to write it all off. But what's interesting, and I couldn't tell you about the overseas thing, but what's interesting, and Ty's going to jump in here, but what's interesting, under the new 174 part of the One Big Beautiful Bill is if you're underneath the 448 limit, which is 31 million of gross receipts, you can go back to 2022 and undo the amortization and write it off its entirety. You take over the overseas thing.
But now, okay, go on. I'll let Tanisha start.
I was going to say you went to a question first. So as far as I know, with that provision, it has to be domestic.
Yes.
That's what I understand for that. And then also you can amend the 22, 23, and 24, but there's still 24s that haven't been filed yet. And the question was, can we expense for 24? And it looks like it's written that you can only amend a 24, but that you can't expense in 24 yet.
So you'd have to file,
and
if
the expense
24
would
is
have
under
to be
extension,
25.
you'd have to file it and then go back.
And then amend it. If you wanted to actually expense, or you could just amortize each year and take it all in 25 or 26.
My understanding, I'm sorry, and I think that if you on extension get the return ready to go, wait to the last minute to push the button. Hopefully we'll get regulations to clarify that, because I think that was just the way it was worded and it was a mistake on their part. Hopefully they'll catch that. But my understanding is if it is done offshore, because there's an awful lot in this bill that's related to U.S. Mm-hmm. If it's done offshore, it's still 15-year amortization. That's the way I was reading it.
That's the way it is.
I could be off on that, but I believe that if it's done offshore, there's still 15-year amortization.
Amortized if offshore and expense if it's on.
If you go back and amend the return, it's not a change of an accounting because of the fact this is part of the bill, so it's not a 3115 issue. You just go back and amend it back to 22 and you write it all off, so you wouldn't need to do a 3115.
And if you've got a partnership with 10 partners and you do all those individual tax returns, think how much money that'll be in your coffers.
Tax Talk Today, the tax show for the tax pro, is the innovative educational program presented in collaboration with the IRS, designed exclusively for today's tax practitioner.
There's various loss limitation rules we need to be aware of when we have a business activity.
Each program features in-depth panel discussions with key IRS executives and leading authorities from the tax practitioners community. Tax Talk Today features real-time interaction. Innovative and easy to use, Tax Talk Today is the only program that brings the IRS directly to you. Tax Talk Today can be viewed in large groups in the office or from the convenience of your home. To get continuing education credits for watching a program, purchase your CPE credits today. Tax Talk Today, the tax show for the tax pro.